Hello everyone and welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, it's actually been a quiet start to the week in terms of economic data and events, but in reality, there has been a few news points which I think have kept markets quite volatile at the start of the week. There is going to continue to be, so a few overhanging themes over the coming weeks and really over the coming months. If you're talking Europe, I think Donald Trump is going to remain a predominant feature throughout, which comes as no surprise to anyone. We look at the movement in euro dollar, for example, today. Now, again, looking at economic data, there actually hasn't been anything worth talking about. We had the economic growth forecast from the euro area earlier today. They were revised slightly down, if I'm not mistaken, but really the market was fairly unreactive to this. Aside from that, there actually hasn't been any notable economic data throughout the day. This week, though, things are looking to pick up quite considerably. We've got inflation data from the UK tomorrow. We've also got GDP data from the euro area tomorrow. We've got retail sales data from the UK on Friday, inflation data from the US on Wednesday, and also retail sales data from the US possibly on Tuesday, or is it coming out on Wednesday or Thursday? Wednesday, here you go. So there's a lot of economic data, and that's not even counting things such as building permits, jobless claims, oil rig count, oil inventories, trade balance data from the euro area, etc., etc., Chinese CPI inflation data. There's so much data throughout this week. I think markets are going to remain more than volatile. The two events which really stand out for me, though, if I'm perfectly honest, it's this Yellen speech on Tuesday, which should be a high volatility event, so don't let that fool you, and also her speech on Wednesday. This is her appearances before the Senate Banking Committee on Wednesday and the House Financial Services Committee on Wednesday. Now, these can be quite heated events, heavily questioned by both committees. Usually gets pushed quite considerably on the Fed stance on monetary policy, whether it believes it's doing things correctly, whether it believes it's following its mandate, etc., etc. These can also get quite political, so there is aspects that you need to ignore, but she does tend to be in this hot seat for around 3 hours on each occasion, so there's plenty of opportunity for her to say things that are going to swing the markets, and at the end of the day, she is the Fed chair, so there is the possibility that she will do so. Tuesday's event, to me, is the more important because there tends to be a lot of repeating between the two. So this is the one that I'm really keenly focused on, and then there'll be one eye on Wednesday just in case we get any more information from her. So, like I say, these are the big events this week. I do expect things to remain quite volatile throughout the week. I mean, this is the difference really between this week and last week. Last week was very light on the data perspective and other major economic events. We were really relying on news flow from elsewhere, such as Donald Trump, whereas this week I think it's going to be quite busy from start to finish. Well, from tomorrow onwards, I should say. In terms of what's really affecting markets today, look at the euro dollar right now. Euro dollar coming under pressure. The dollar index is actually up around 0.25% on the day. A couple of things really pushing that. One is still Donald Trump's announcement last week that in the coming weeks we were going to get a substantial change to the tax regime. This is obviously referencing to the tax cuts he was promising prior to the election, which is stimulative to the economy, which is beneficial to the dollar because the more stimulus you get in the economy, the more chance you've got of higher economic growth, and the faster the Fed is going to have to tighten interest rates in order to control inflation. The other thing, also over the weekend, we saw that Donald Trump did meet with Japanese Prime Minister Shinzo Abe. This comes following his call with Chinese leader Xi Jinping on Friday. Now, these are two areas that people were quite concerned with because his policy stance leading into the election were usually quite negative towards both of these. He wanting to name China, label them a currency manipulator. There was a lot of rhetoric around trade. Similarly with Japan, talking about them forcing their currency lower in order to try and gain a trade advantage. These two economies, again, over quite closely the relationship between the two has previously been quite close. So there was concerns about what Donald Trump's foreign policy stance was going to be here, but it seems that despite some early, let's call them mistakes, although I fail to see them necessarily as as unintentional mistakes, it does seem that Donald Trump is back. Taking a step back from his previous rhetoric, we remember. I think his acknowledgement for One China, I think, was a big step forward in terms of relations with the Chinese president, and I think also the fact that the joint statement following his meetings this weekend about the need to cooperate together, etc., again was just seen as this sign that he's finally easing himself into this role, and rather than creating issues in every area, I guess it looks like he is starting to find common ground, and that's positive in terms of the global economy, and I think that's positive in terms of the US economy, and I think it's from a geopolitical standpoint as well, it's positive. So I think that's given a little bit of a boost to the markets as well, and again, once again, the US dollar. So we've seen the US dollar rallying off the back of this day, but we've also seen some weakness in the euro, and I think this again feeds back into the political situation in the euro area. The French elections are fast approaching. It seems that Greece is back in the headlines because of its disputes with the IMF. The IMF creating much more dire economic forecasts for Greece in respect to the bailout program, and therefore insisting on the potential for more cuts to spending, to its pensions, etc., which is creating difficulties and casting doubt on whether Greece will actually agree on reform measures with its creditors over the next couple of weeks, which will enable it to get the next disbursement of the bailout as we enter a very tricky period because of all the elections in Europe. And then there's also been reports today that Germany's losing more ground to the socialists ahead of its election. So quite a negative economic political news in relation to the euro, and I think that's why we are seeing the euro coming under a little bit more pressure today. Now we are at 106 currently, moving back to the technical side of things. Now that's proving to be to offer some temporary support, having done so back on these couple of occasions here. But to me, as far as I'm concerned, I think this is looking a little bit negative now. If we see a close below this moving average here, which if I'm not mistaken is the 55-day simple moving average, it is, then I think we could be looking at a much more substantial move to the downside. We had this kind of topping formation where you saw that the momentum really fell out of the move once we made this most recent high back at the start of February. Then you've got this previous support, so you've got this kind of almost double top formation forming here, breaking through that support. If we see a close below here today through the moving average, it really wouldn't surprise me if we're headed making our way back towards these 104.50s, maybe even back towards these 103.50s even in the medium term. So assuming we get a close below that moving average and the support levels today, or even worse 106, then I think a lot more downside could follow in the coming weeks. Not much to update on in cable. We've found this support once again around 124. We've traded back towards 125, but if anything, this trading range is consolidating rather than expanding, so nothing really to update here. And given that I've already talked for almost 9 minutes, I think it's important that we just move on where possible. Euro sterling is trading back at an interesting level around these 84.50s. We made a new lower high here, which was very interesting, below the top of the moving average band. I've highlighted this level previously because we've got this kind of head and shoulders formation. Now typically this will be found in an uptrend, so I'm not necessarily looking for the projection component per se from the break of this possible head and shoulders. What I'm looking at this is a key support level, and a breakthrough here could well open up and move back towards these 83.50s, at which point we've got a test of the bottom part of this moving average band. That's the 200 and 233-day simple moving average, but also this long-standing support, and a break of that support. This is a much bigger, much clearer head and shoulders, and it's in an uptrend. So a break through these 83 to 83.50s, sorry, I think would be extremely bearish, and that could be a break through the 84.50s could be a sign of much more dire things to come for this currency pair. Aussie dollar versus the US dollar, again, it's looking a little bit toppy here. You can see once again the momentum really has fallen out of this bullish trade. Fact that this is happening around what has previously been a solid area of resistance means that it shouldn't really come as too much of a surprise to anyone. I think the 76 is a key at this stage, because a failure to make a new high here, should we break through the 76s, then we've got a nice looking double top formation here, 77s through 76, potentially then triggering a move back towards these 75s, which would become a very notable area of support in the Aussie dollar pair. I'm trying my best now to look at dollar CAD. If I can just type it in, here we go. The US dollar versus the Canadian dollar. Now we've made a new lower high here. We bounced off the 38.2 fib, or if we just take the most recent high to low, we've gone into that 50 to 61.8 fib bracket before trending lower. To me, again, this looks like these 130s are going to come under some considerable pressure, given how many times that's been tested recently. I think I wouldn't be surprised to see it give way. But I think, given the fact that we're seeing these lower highs being made into these 130s, it does potentially at least look like this 130 support could be on borrowed time, at which point we could be looking all the way back towards around these 127.50s, 128s, which, as you can see throughout this period, was a notable area of support. But we may have to wait a little bit longer for that. But at least in the short to medium term, that 130 looks like it's going to get another test. New Zealand dollar versus the US dollar. Now, we saw this sell off late last week after the RBNZ signaled that it's going to keep interest rates stable for the next couple of years up to around 2019. Now, this came on the back of markets actually pricing in around a 35 basis points of rate hikes this year. So clearly the market was getting very much ahead of itself, and therefore we saw a selling off of the New Zealand dollar, of course, because that's a much more dovish stance from the central bank than markets were expecting. We've come back towards these 71.50s, but the fact that we've made lower lows from Thursday and Friday suggests to me that further downsides to come. I think 71 is a key level here. This is where we've got the combination of four moving averages, the 55, 89, 200 and 233, and also the top of this previous channel as well, could make this quite interesting. You can see here that we saw 2 days of sell-offs. We did see a small little bit of consolidation, a little bit of profit taken maybe. The fact that we've broken through those lows, for me, is what's particularly bearish in the short term. It'll be interesting to see where the fibs land here as well, because the 50 fib lands just above that 71 level as well. So it'll be interesting to see how we respond to there. We previously held up on the 38.2. So a few interesting levels to look at there. To be honest, I think this is looking bearish generally. I think we could go through the 50 and potentially even the 61.8 because the US dollar is strengthening and because the market was caught offside in terms of the RBNZ. The dollar yen is starting to edge higher now. It looks like we've front run the 110s for now, but we're not out of the danger zone yet. Just because we are trading higher, we've still not made a higher high yet. We've not even made a higher low, so this is looking a little bit more bullish for now. But I think the key test now comes around these 115 levels. 115 being these previous levels of resistance, the top end of the moving average band. I'd like to see a move through the Ichimoku cloud to the upside to confirm this move higher. Like I say, things are looking a little bit more bullish. We had the drop off in momentum on the most recent low, but I wouldn't write off the potential for another test low before we do edge higher. It'll all depend on how we trade around those 115s, which for me is key. Euro yen and sterling yen, I don't think there's much really to update on. Euro yen's looking a lot weaker than dollar yen. One of the reasons why I think we may see another test lower actually in dollar yen, the potential for a little bit more risk aversion is very much there. The euro yen is looking still weak. I think there is going to see a test at the lower end of that range around 119 in euro yen. You can see that the most recent rally has been heavily sold into on 2 days now, which is looking particularly bearish for me around the 121. So I wouldn't be surprised if we see these 119s tested, and that's going to be obviously an incredibly important level. But euro yen certainly not out of the woods yet by any stretch of the imagination. Sterling yen has recovered a little bit better, but again, we still remain really in this trading range. I think the first test here comes around these 142.75s. This is where we've got the confluence of those two moving average bands. That will be the 55 and the 233. A breakthrough that then could trigger a move back towards these 145s, which is the most recent highs. And of course, the top of the Uchimoku cloud is always key. Again, it just wouldn't surprise me if we do just take another turn to the downside just to test these lows. But I think he'll break through the 142.75s would at least signal to me that the market is looking more bullish. In terms of gold, we've come back towards these 1220s where we're currently still finding support. We've had another rebound off here today, so that's clearly quite an important support level as far as gold is concerned. The fundamentals really are against gold at the moment, given the inflation environment in the US, the potential for more rate hikes, the fact that we've gone into a more risk-on environment today on the back of some positive Trump news, and the fact that the dollar is strengthening. All of these do work against gold, but you do just feel like you do just feel like we're not, again, I keep saying this, we're not quite out of the woods yet in terms of the risk aversion in the markets, and I wouldn't really be surprised if this is just a correction. We do see a little bit more dollar weakness to come, and we do actually see the 1250 1255s tested in gold. There's clearly some support here, but a break of this, then I think we could be looking at a big test for these 1180s, and that'll give us a lot bigger indication of how the outlook for gold is looking. 1200 always offers possibility of support and resistance, but you can clearly see this defined range of 1180 to 1220 looking important for gold. I'll wrap things up with oil. We did get the OPEC report today. It confirmed what the IEA reported on Friday, and that is that compliance with the production cuts by OPEC members has been strong. Kuwait oil minister also confirmed this earlier in the day. The report confirmed that 93% compliance so far with the output cuts, and Saudi Arabia has actually now cut below the level it committed to cutting to when the deal was made. So a really positive sign here from OPEC. Kuwait oil minister actually suggested that non-OPEC compliance is at around 50%. So that is a concerning sign, especially when oil rigs in the US are continuing to rise as they did once again on Friday. And US production is continuing to increase, as well as some other non-OPEC output. But the OPEC cuts are currently still and are expected to continue to outpace it. Now, there has been suggestions that the deal could be extended beyond June. This was actually suggested by the Russian energy minister Novak earlier on today, that discussions could take place in April or May time with Saudi Arabia to discuss the potential for extending these cuts. I think many people are in agreement at this stage that an extension is going to be necessary if the market's going to go into deficit and start eating away at the excess storage, and that would be necessary to get a sustainable move into the $60 to $70 a barrel range. Now we're hanging around these 52 through 56s, and at the moment I'm seeing no signs that this is going to break, because every time we hit the top of the range we get selling into it, every time we near the bottom of the range we get buying. Today this selling has come despite the fact that we've had some bullish news, but then the bullish initial reports actually came on Friday from the IEA, so it's almost a case of buy the rumor, sell the fact that we're seeing today. Also, the stronger dollar's playing its part as well. But I think the fact that we're at the top of the range is probably a massive contributor to this as well. Again, that 54 now becomes an important support, as it was previously, and a breakthrough there would bring the 52s back into focus. WTI is very much the same. We sold at the top of the range. We've got this kind of bearish engulfing pattern now. I think we're looking back now potentially towards, I think, initial support around the 52s, but then you're looking back at around these 51s, which has been support prior to that. But you have had this kind of gradual possession of higher lows, so I think 52, 51 and a breakthrough there potentially could be a sign of weakness, but to be honest, there's so much support still below here, around from 49.50 through to 50.50. It's nothing that I'd be overly concerned about. I'd just be surprised if we see $50 actually broken. I think that just about wraps us up. That's about 20 minutes, so I hope you all held on in there and didn't get too bored. As always, feedback is more than welcome, and I will continue to put these videos out most days when possible, and as long as you guys continue to find them useful, I'll continue to do it. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.